Oh man, liquidity crisis. Bitcoin faces a huge crisis of liquidity, driving the price to the downside. This is a coordinated attack by the US, who are single-handedly trying to bring Bitcoin and crypto to its knees. What are the key levels in the charts? What do we need to watch for? Because right now, this is not good. We have to face it. That we have to understand that the dynamic from what we're seeing in the US as this coordinated attack is really starting to take effect on crypto. We spoke at the early phases of this year that this Operation Choke Point 2.0, where the US government is trying to squeeze all the on-ramps onto crypto away, take away all your different avenues of turning fiat into crypto, was going to have an effect, and slowly we're starting to see that effect happen. First, Silicon Valley Bank, Signature Bank. We know these were two big crypto banks, right? What a coincidence that those were the ones to collapse. Now means that many corporate crypto companies and individuals, high net worth individuals, are unable to on-ramp in the US. We then saw them go after Kraken, finding them 30 million. We saw the issues with Paxos, BUSD, right? Shutting down BUSD, it's the stable coins. These are the different ways that they can stop you from taking your dollars and doing what you feel is right, which is going into crypto. Right? How is that fair? It's not fair, but we know that that's their status quo. They're trying to stop people in America and Canada from getting onto crypto. And the reason I say Canada is you can see here that one of the latest updates we've got is that Binance announces its exit from Canada, citing regulatory tensions. And this is the theme of the day now. We're getting to a point where these exchanges are not trying to sit with regulators. They're not trying to sit and explain anymore because the regulators are sending them on a merry-go-round. Yes, the regulators are not telling Binance or Coinbase, do this and you're compliant. No, they're not telling them. They're just serving them with legal notices. How can you run a business like that? Right? How can you run a business where you open the business today and nobody tells you what is lawful, what's unlawful? They just make it up as they go along and just serve you with legal notices. You can't run a business like that. Right? So you're starting to see that these exchanges will simply withdraw from those jurisdictions. And that's what we're seeing with Binance. We've seen that with Coinbase, but now it's affecting another place as well. And that is liquidity providers, market makers. Two of the biggest market makers in the space, Jane Street and Jump Trading, have now decided to retreat from the US crypto trading, right? They want to pull out as well. They're going, hang on a second. Why do I want to get involved in this? This is a mess. Regulatory environment is uncertain, and I do not want to be involved. And this is creating thin liquidity in the market. When there's thin liquidity in the market, guess what? The price can dump quickly and powerfully when there are even moderate sell orders. So a moderate sell order can now move this market multiple percentage points, and that is the effect you get when you're thinly traded in terms of liquidity. And so the question's going to be, what's the play from now on in? Is the US going to let up on this, or will crypto find other ways? And if you look at the history of crypto, it's faced this adversity before, right? It's faced losing major exchanges. It's faced losing stablecoins. It's faced losing jurisdictions which want to ban crypto and then suddenly unban it, right? Crypto is the most resilient asset class we've ever seen. So for you to see this adversity and panic, there's no reason to panic. There's no reason to panic. It's not ideal. I mean, we'd love for US and Canada to be on board and let everybody do what they want to do with their money, their hard-earned money. But no, they don't want to, right? But crypto's going to be fine. Crypto's always figured this out because people find crypto. Crypto doesn't need to find you. You will find crypto when you need it. If you've made it this far into the video and you someday want to be able to read the markets, do technical analysis, trade as we are doing on this channel, then perhaps you may want to check out my free technical analysis from scratch course over on Skillshare. For those who aren't familiar, Skillshare is an online education platform. You sign up for a nominal amount each month and you get access to a wide variety of different courses. I personally use it to learn all sorts of things, from video editing to financial to using Excel and various other bits and pieces that you may want to learn. It's far better than YouTube on those elements because on YouTube, everything is about retention, whereas with a course, you can put things in a structured curriculum, and that is exactly what I've done with my TA course. It's completely free for the first 30 days. If you click the link in the description, ijaz.uk/TA to take advantage of the TA course. Let me know what you think about it and let's get back into this video. When you wake up and you go to your American regional bank and find out that it's collapsed and the 10 million you worked your whole life on, you sold your company for, is suddenly disappeared and you're only insured up to 250,000? or you find out that that story happened to your brother or your friend or your mom or your dad, guess what you're going to do with your money? You're going to look for an immutable asset. You're going to look for a decentralized asset. You're going to look for somewhere to put your money where the keys are actually yours, and you will find Bitcoin. Bitcoin doesn't need a marketing campaign. Traditional finance is the marketing for Bitcoin. As traditional finance continues to fail, as it continues to print money, as inflation continues to roar, as they continue to loosen their monetary policy in the next cycle again, and prove that the traditional finance is broken, banks continue to collapse, that's when crypto will continue to propel. And we've seen that time and time again. And of course, on top of that, you've got this built-in halving, which we know we are day by day getting closer to. Okay, so we sit there, that's the broad landscape of what's going on, that's why we're seeing pain in the market, and we look to support. And I made an extensive video yesterday. Make sure you go watch yesterday's video. I really do talk about every single key level in this chart right now, and you need to watch that, okay? Because that was the one TA video you need. If you're gonna watch any video of the next kind of week or so, go watch that video. It's gonna explain exactly what happens, when to panic, because right now isn't the time to panic. And if you look at this, we drop down to the hourly. What have we seen? Right? So far, we've seen this bounce play out exactly like my arrow. I just drew a squiggly line yesterday, and I said, guys, we could hold on this orange line. And we did hold, and we started rotating to the up direction. But what did I say? I said, we got to be careful of this. We got to be careful of you turning here and going down to 25K, which is this yellow line. Okay? So don't get caught up too much into this unless we start getting really high up towards 28,300. That is what we need to see. We need to get above, and there's an important support line at 27,700. Okay, that's what we need here on Bitcoin. Otherwise, this move is just the bears calling off. The bears could be wanting to call off here for a couple of hourly candles, and boom, they're going to try to push us towards 25. Okay, that's what we need to watch out for here. If we look at the different patterns that are playing out, which we've monitored, you can see here, we've stalled a little bit and held some support, as we can see, on the way to the price target of this symmetrical triangle breakdown, which does break down to 25,000. So again, 25,000 continues to be in play here, just because this was coiled up a little bit. Like I just shared with you, it could be the shorts kind of chilling for a bit, resetting, and then the bears will continue pushing on down to the next price target. Similarly, you look at the Fibonacci ratios, we're trying to hold here, right? Where we're trying to hold is in the golden pocket. But if we lose the golden pocket, same issue. We're going to fall down. We're going to need to get to the next level, which is the 0.5 level, which sits at 25,000 again. Okay? Let's look at another way to look at this. Head and shoulders pattern. Again, we're holding a little bit here, but the trend continues to be in the downward direction. And so you do look out for the price target. This particular price target sits at 24,000, which I think is a bit steep. 24,000, like I shared in yesterday's video, will start getting me a few panic alarms because we'd be losing our weekly EMA ribbon. But other than that, if this wants to work towards 25, I'll personally be looking for points to enter the market. The main message to take away from here is, yes, we're in a bearish stance right now. Yes, Bitcoin is trying to create some support, but this is being led by a liquidity crunch. Regulators in certain jurisdictions like the US and Canada are not friendly with crypto. Whether you're Coinbase, whether you're a Binance, whether you're Gemini, whether you're Kraken, they don't want you operating there. And they're going to make it harder and harder for you to move fiat into crypto. And whether we like it or not, as people in crypto, maybe we figured out decentralized ways of getting on-ramped onto crypto. But the average person goes to an exchange and they buy some crypto. And that's the way we're going to get mass adoption. But we got to be patient. Bitcoin is used to adversity. It becomes stronger in adversity. And that has been the history of Bitcoin since it was created by Satoshi in 2008. Hope you guys enjoy this Saturday update. If you appreciate it, smash some likes. Don't forget to subscribe. Go watch this video here talking about Satoshi. And I'll see you in the next one.